Hello and welcome back to US Stocks, your channel for clear-eyed market analysis. It's Thursday, October 2nd, 2025, and today we're diving deep into a name that has defined the AI hardware revolution, Supermicro, ticker symbol SMCI. After an astronomical, history-making run in 2023 and 2024, the question on every investor's mind is no longer what is Supermicro, but rather what's next? Has the rocket ship permanently docked at a new plateau, or is there another stage of boosters waiting to fire? Today, we'll cover the latest price action, dissect the current analyst sentiment and price targets, and lay out the future outlook, both the bull and bear case for this AI infrastructure titan. Let's get into it. First, let's ground ourselves in the present. As of today, Supermicro is trading at approximately $1,250 per share. Now, to anyone who has followed this story, that number represents a monumental journey. But the stock's trajectory in 2025 has been markedly different from the vertical climb of the previous 2 years. We've seen a period of consolidation, with the stock trading in a wide but more defined range. The era of it doubling every few months has given way to a more mature and, frankly, more volatile market valuation. This is happening for a few key reasons. The AI gold rush has matured. The hyperscalers, big cloud companies, bought GPUs and servers at an insane pace in 2023 and 2024. Demand is still huge, but now more predictable. Competition is here. Giants like Dell and HPE have finally rolled out comprehensive AI server solutions, chipping away at the perception that Supermicro was the only cutting-edge option. So, the stock today reflects a company that is no longer a hyper-growth secret, but an established, dominant player in a fiercely competitive field. So, where does Wall Street believe SMCI is heading from here? The sentiment is best described as cautiously optimistic. The days of unanimous sky-high price targets are gone. The average 12-month analyst target is around $1,450, representing modest but respectable upside from today's level. But the range of targets tells the real story. The most optimistic analysts have targets stretching as high as $1,800. Their thesis rests on 3 pillars. The next GPU cycle, with NVIDIA's platform expected in 2026. SMCI's liquid cooling leadership, which has become essential, not optional. And enterprise adoption, as more companies build their own AI factories. On the other hand, cautious analysts have targets closer to $950, citing risks like margin compression from competitors, supply chain normalization reducing SMC's past edge, and a potential macro slowdown cutting enterprise IT budgets. So, what's next for Supermicro? The story has shifted. This is no longer about just riding the AI tidal wave. It's now about execution, innovation, and defense. The next GPU cycle could reignite strong growth. Their liquid cooling moat is becoming critical. Expanding into enterprise AI factories could unlock new high-margin opportunities. But the risks are real. Competitors are scaling fast. Investors will judge SMC on every earnings report. And economic uncertainty could stall large AI projects. Final verdict. Supermicro remains a best-in-class operator and a critical enabler of the AI revolution. But this is no longer a simple hyper-growth stock. The explosive gains are behind us. From here, it's a show-me story. Investors need proof of 3 things: sustained market leadership, liquid cooling differentiation, and stable margins despite rising competition. If SMC executes flawlessly, the bull case of 1,800 is realistic. If not, the stock could re-rate lower. Either way, this is one of the most important companies to watch in the AI infrastructure race.